Hey, what's up guys, John here. How much money do you need to make in America to live comfortably in each state?
Do you realize what the cost of living is in this town?
Well, in 2018, the numbers are quite different than what they are today. But what will be the number in 2025? After all, that's a blink away. And we're already halfway through 2024.
Over half of Americans say their salary just isn't enough to cover the cost of living anymore.
Well, I'm going to show you with verifiable facts and proof that we are walking into a situation where the 95%, the bottom 95% of the economic scale is about to get rug pulled in the biggest way. And I mean that, I couldn't mean that anymore. I mean, look at this, for example. So in Washington, and by the way, dates are important, February 5th, 2018. In Washington, they said that you would need a whopping $68,000 a year to get by in Washington, D.C. You could live in South Dakota for $45,000 a year for a family of three. Well, how much do you think you would need to live, now this is April 20th, this year, in Washington today? If it was $60,000 back then, $68,000 back then, the answer, according to the same exact source, CNBC, they are saying $257,000, almost $200,000 more today than in 2018. How is that possible?
That's simply not possible.
Why isn't it possible?
It's just not.
Why not, you stupid?
If inflation's 5% or 10% or 3%, you start to look at these numbers, it's astounding. It is absolutely shocking. And that's why you're seeing credit card defaults skyrocketing. You're seeing people missing home equity lines or credit loans, personal loans, payday loans, installment loans, getting their cars repoed, all of this stuff because America's tapped out. That's what's happening. Well, in this video, I'm going to show you what happens next to help you and position you for what I believe is going to be the greatest transfer of wealth and assets we have ever seen. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's really going on in America's economy. And if you'd like to fix your credit to position yourself for funding, possibly to invest in distressed real estate, maybe to buy a business or fund your own business, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for Monday. Take a look at this. So 2018, here's what they're saying. They're saying you could live in Florida with a family for $52,000 a year, right? $52,000, like it's crazy. Alabama, median household income $46,000. Alaska, $76,000. Arizona, $53,000. But most states are, California, $67,000. How much do you think California is today? California, they say that you need $276,000 for a family. $276,000. When you needed $67,000 just 5 years ago, right? Colorado, $65,000, Connecticut, $73,000, $61,000, Florida, $50,000. So when we have countries like China and these are other very, very, very powerful players that are de-dollarizing right now, what's going to happen? And we walk into all these new policy decisions, many of which would argue are inflationary. Well, your cost of living is going to be going up. At least in the short term, that's what's going to be happening. Idaho, $51,000. Illinois, $60,000. Every single state, back then, Maryland, $78,000. Every state was basically sub 80K. You could live pretty comfortably. You could live pretty comfortably in basically every state in the country for sub 80K. Well, what do you think the numbers are now? Well, you can't live anywhere. You can't live anywhere close to that. Alabama, you need $193,000 to live in Alabama. Alaska, $242,000. Arizona, $230,000. So when you follow the trend, there's just no way that these numbers are not going to be in the threes, maybe mid threes next year. Most of these numbers are already almost touching the threes. These are low twos right here. Hawaii is $294,000, which is, you kind of expect more, cost in Hawaii. But basically every state is already in the twos. Maine's $229,000, Massachusetts $301,000. Like this is where we're at right now, and I think many people don't understand, or at least there's so many things happening in the world, they don't comprehend how far the world has really went the last 5 years. We're living in clown world where you go to a restaurant. I had a poke bowl today. It was basic. I added avocado. It was $27. $27. And the lady asked me if I wanted a tip. Yeah, I want to walk out of here with a $35 poke bowl. Like this is where we're at right now. $30, $28. You could You could take your wife or your husband out to a meal, probably get steak or chicken, a nice restaurant for that kind of money 5 years ago, right? It's absolutely shocking. They say that, wages are in 2024 about $74,000 according to USA Today. So average wage $74,000, but you need to basically make 5 or 6x that for a family anywhere. So this is why 1 in 5 users maxed out their credit cards. 1 in 5 users right now maxed out their credit cards. Credit card delinquencies are rising. Blame inflation. Average consumer carries $6,200 in credit card debt. More Americans are falling behind on debt. All of this is, last 72 hours, right? So how are we not going to walk into a situation with massive credit contraction? Because the lenders are going to see the losses across their portfolios. And they're going to say, you know what, some of these borrowers are, we need to really reduce our exposure to certain borrowers. I've been talking about this, but what I find very interesting is what China is doing. China, they announced yesterday that they are diversifying away from the US dollar. So they're going to be diversifying away from the US dollar. They already sold $53 billion worth of T-bills, and they've invested heavily into gold. And when you look at what's happening right now with gold, silver, copper, platinum, palladium, all doing extremely well today. Why? Why would they be doing extremely well if America was, really, really strong? Well, it's because people, countries, entities, powerful institutions and corporations are looking at the writing on the wall that we're walking into uncertain times. And the consumers really tapped out. That's what's happening. And they want to reduce global reliance on the US dollar for trade and financial transactions. Let's look at what JPMorgan.com is saying. What would be the impact of de-dollarization? Fundamentally, and again, if it's harder for us to sell our debt, interest rates are going to go up to attract buyers, meaning the price to service all adjustable rate debt is going to get a lot more expensive, and lenders are going to continue to contract. It's going to push a lot of people over the edge with their credit card debt because the minimum payments are going to be going up. It's just going to be an absolute disaster. Fundamentally, de-dollarization would shift the balance of power among countries, and this could in turn reshape the global economy and markets. The impact would most acutely be felt in the United States, where de-dollarization would likely lead to a broad depreciation and underperformance in U.S. financial assets versus the rest of the world. For U.S. equities outright, and relative returns would be negatively impacted by divestment and reallocation away from the U.S. markets and a severe loss of confidence. There would also be an upward pressure on real yields due to partial divestment of U.S. fixed income by investors or the diversification or reduction of international reserve allocations. However, the result of de-dollarization on U.S. growth is uncertain. While a structurally depressed dollar could raise U.S. competitiveness, it could also directly lower foreign investment in the U.S. economy. In addition, a weakening dollar could, in principle, create inflationary pressure in the U.S. by raising the cost of imported goods and services through benchmark estimates suggest these effects may be relatively small. So inflationary pressures, interest rates, it's a problem. The dollar's transaction dominance remains top of class despite secular declines in U.S. trade shares. And as that begins to happen, de-dollarization, BRICS are getting ready to give the dollar a run for their money. It just came out 2 days ago. China, the second largest global economy, is rapidly reducing its ownership of U.S. Treasury bonds while simultaneously boosting its gold reserves. So my opinion is, if we look at the trend going from $50,000, $60,000 for a household, 5 years ago, to now $200,000, $250,000, some places like Massachusetts, $300,000 a year, and we see what's unfolding right now in the economy, it would be very naive to think that we're going to see a 2 or 3% inflation at this trend. I would bet that if you make 10 or 15 or 20% more next year, over the next 12 months, your living standards will be reduced. Sad, but that's a reality. If you make 30, 40% more, you find a way to make a lot more money, you're going to probably be able to maintain your living standards, because this is how fast the dollar is, our dollar is losing value and our purchasing power is getting eroded. Right now, if you work for a job, if you have a boss or an employer, the best thing you could possibly do is find ways for that boss or that employer or that company to thrive, to do extremely well. Because if you can find a way for that business to do very, very, very well, you'll be paid in relation to that. If you own a business, pay attention to these trends, because I believe we're going to see a lot of companies go out of business, especially if they're selling fidget spinners, they're selling these little gadgets and things that did really, really well 3-4 years ago with all the stimulus money. Everybody was be able to sell anything. over the next couple of years, I'm betting that we're going to see consumers pull back heavily on things they don't really need, those discretionary purchases. They're only going to spend money on things they really need. So if you're in the right business, you're going to capitalize really, really well on this. And if you're not, I think we're going to see a lot of businesses going under. I think we're going to see a lot of employees leaving certain industries, and we're going to see top-level employees doing extremely well, and great companies, great small companies doing extremely well. But there's just no denying what's happened to America, what's happened to our dollar, and where we're actually going. What do you think about this entire situation? Drop below. Let's have a conversation about this. If you'd like to fix your credit, we'd love to help you, help position you for funding. If you're thinking about investing in distressed real estate, maybe buying a business, getting funding for a business, buying a work truck, you intend to pass a credit check and maybe you have some issues on your report, we'd love to help you. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any issue like that at all on your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for Monday. Catch you next video.